G'day there. Welcome to the closing bell on the 4th of May for you guys. I'm just doing this on the Friday Arvo. And I guess one of the most interesting things over the last week is the moves in the Japanese yen, with a lot of sharp selling early in the week and then government intervention. And just want to have a quick look at that because when these major currencies have big moves, it really can start to affect other things quite rapidly, especially in the bond market and ultimately stocks as well. So it's good to just have an idea in the back of your head about what's going on. Not at crisis levels yet, but I thought I'd just give you a quick rundown of where it's at so you can get a sense of the fact that it is a fairly explosive situation with, Japanese interest rates down near zero still and inflation still rearing its head in the US, rates up around over 5%, people getting worried that rates might even go up, who knows? But it's a situation where that big disparity between the Japanese and US yields is creating some tension in that US yen. Obviously, people are selling the yen and buying the US dollar, uh, basically borrowing in yen and investing in US government bonds, getting that large disparity between the yields, picking that up and making good money with leverage. And that's sort of quite behind the big rapid moves we've seen with that yen depreciating or the US dollar increasing. This is actually the US yen. So when it's going up, US dollar strengthening, and the yen is weakening. And the fact is that just looking at it technically, you can see that it's been in this range below sort of 150 since 1990. So we're talking 25 years of creating really a pretty tight range over that time, capped at around this 150 level. So if we're looking at that really long-term chart, you can see here going back to 1971, it's sort of a classical technical analysis of this would be, is this some sort of rounding bottom we're looking at? And, the breakout above these key resistance areas, this one being from around 1990 up around 160, and around 150 being the high in that US yen really for the past sort of 25 years. So this area where it's just rallied into just in the last sort of week, it's getting up into nosebleed territory compared to where it's been trading. So the question is, does it really break out? You'll remember, hopefully, if you've been watching this for a while, it was way back at 120. Right back here, I first alerted you to the risks for the US yen, saying, expect pretty big upside in that based on the interest rate differentials. But now that it's up here, and really there's increasing tension as US rates continue to rise, this is where the market was, this week breaking out above 150 and really flying up to this area from back in 1990. And that's when the government intervention came in, which I guess makes sense, doesn't it? Pushing it back from the edge of this sort of level where, it could do something like this. We have to be prepared that sort of a outcome is possible, especially if they keep rates near zero and inflation could then start kicking higher in Japan, etc. Lots of things can flow from this. But just wanted to alert you to that, pretty interesting technical situation. It's not often you see a market sort of testing highs, multi-decade highs in this sort of a situation with that interest rate differential so stark between Japan and the US. And so, you really can make sense of the uh, government, BOJ, sort of coming in and stopping the rot at that point. So at the moment, the yen strengthening, pulling back, but, you know, just keep an eye on it, because if the market takes this BOJ on and we see it really heading up, I mean, can the BOJ really, well, potentially intervene so much that they put the whole carry trades at risk? If the volatility really picks up, the carry traders won't like a yen doing something like this, for example, because they're long US dollars and short the yen. So if the yen really strengthens based on intervention and the volatility in that US yen really rises rapidly, they may unwind carry trades. If that were to occur, yeah, you're then starting to think about they'll be selling US bonds to unwind those carry trades if something like that happened. And we already know the US bonds are weak. So this carry trade that's been going on with this yen, weakening consistently like this, that has been probably providing pretty good support in those US bonds, despite the fact rates are sort of increasing over these last few months. Perhaps they would be increasing more without this carry trade happening of selling the yen and then buying US dollar, buying US government bonds. So, lots can happen from here. I'm not going to make a big guess other than, I don't think it's over yet. So a bit of strength in the yen. I wouldn't be surprised for it to have another go at that level. And I'm just, open to the possibility that we could be looking at something like that, just based on the technicals of a, real, yeah, rounding bottom, breaking out above a major level, and what's above there. So that could be an interesting outcome if that were to occur. So just that's just a little starter. No real big statements about what's going to happen, just that it's something to keep your eye on and to understand, what that situation is and why the BOJ is stepping in and trying to strengthen the yen at this very important level. So it's been an interesting market from the point of view of this inflation really getting a bit sticky. Services inflation very high, up around 6-7%. It's a situation where I think the Fed, the RBA, they don't want to be raising rates, but they can end up sort of holding off and ignoring the fact that inflation still is bubbling away. The government's spending like the clappers. They don't want to stop spending. We've got the election in the US end of the year. That's often when they're spending like crazy to keep everyone happy to vote for them. So, is this inflation going to get away from them? Is it going to be like the 70s where they don't get on top of inflation and end up having to raise rates further down the track? And, it's hard assets is where it can show up that inflation really isn't under control. Things still very strong, unemployment low. Are they that restrictive, the rates? So, seeing copper take off is something to note, definitely. There is copper's just fact that it is in a situation where we're looking down the barrel of demand supply being out of balance over the next few years anyway, and that may be happening earlier than people expect. So it has seen this really sharp move to the upside in copper, and I just wanted to give you a sense of how it could sort of play out from here, how to I guess get on a pullback, so you're not sort of frightened by any sell-off in copper from here and can remain bullish until the levels I show you are breached. And that other commodities as well, the rare earths, lithium, are starting to make little noises, and they're not quite there yet. but I've shown you sort of aluminium, zinc, um, are starting to see some strong buying after being very weak. But it's copper that is just super strong. And, looking at copper over decades, this whole area around 450 to $5 has capped copper for a long time. So the question is, what happens if copper does head above $5? People are saying it needs to head to 650 over the next few years to help bring on more supply. So that may very well be the future for copper, and it's looking like that sort of a setup could take shape. But I just wanted you to be aware of the fact that it could still pull back a bit from here. So just focusing in on the short term for copper over the last few years, and I'm just looking at that huge wave higher from the COVID crash and analyzing everything based on that. So we've got the point of control there, and we've got the buy and sell zones. So 75%, 87% retracement, and here's the 12.5 to 25. And the point being, these are sort of areas where I expect to see reversals back towards that point of control. And you can see in the past with copper, once it did create that high, we had the retest of the point of control, so the mean reversion of that prior wave. It then rallied, and where did it get to? You can see there the sell zone exactly, and then we had another mean reversion event over the last few years, but it's provided support, hasn't it? And then the long-term trends turned up, buy pivots occurring. So it's started to look good, and then it's blasted off. And you can see that it's just testing the top of the sell zone here. And we've had a couple of really good months in copper. So it's pretty rare for copper to just keep exploding higher like this. And look, maybe that's going to happen. But what's more often the case is after a few good months, you then, as you can see here, a few good months, there's then work done before it's ready to blast off again. So now that we've had that rally, just don't be too upset if copper was to pull back. I'd see that as buying opportunities more than anything else while it's in this long-term uptrend. And just want to point out, in the short term, if we're saying copper is actually going to start heading higher again, we're looking at this wave structure that's set up and basically saying, it needs to go back below this wave in the short term, which is also the point of control. So around 350, long way down. But that is actually where it needs to go below to switch off this current bullish move. So, copper could go all the way back, to 380, which would be, that buy zone area of this most recent wave that you can see here. So it's, you're following this along, expecting and saying, anything can happen, and just getting those lines in the sand where you say, well, below there, it definitely looks different. It changes the picture dramatically back under 350. And at the moment, you'd say that's a very low chance. So from here, any sort of weakness, sell-offs, even a sharp one, is to be seen as a great buying opportunity for copper and copper stocks going forward. But I just wouldn't be surprised for it to struggle a bit up here. Remember, this is really lofty levels for copper until we really do see good, strong economic growth, I guess. Rates are still very high. We still might be leading towards something going wrong with inflation and rates, right up at 5% on those 2-year bonds in the US. Things can still get a bit sketchy from here. So, be aware that everything is still on the table going forward. But this copper just looking very interesting, and it is starting to see other commodities as well look a bit interesting from very oversold levels. So I think that's probably enough for today. Look, it's really tough environment, I think, in stocks. Um, if I was to just look quickly at the S&P, this being the weekly of the S&P, and the more rates march higher, the more nervous I sort of get. But until we get a weekly trend shift, you got to give it the benefit of the doubt a bit and see, it can still turn back up. So, weekly momentum is down. So I'm a little bit, watching this and seeing whether the downside continues, especially with rates as they are. But, just going back to 2015 odd, just look at the weekly downtrends that have happened since then. And, you know, you can see, even if the weekly downtrend doesn't last long, it can be a pretty good indicator. That's a little one. The big sell-off happened there. Big sell-off, of course, here. Huge sell-off. This one, big sell-off, but didn't last long. And then it went back into weekly uptrend. So until we get the weekly downtrend, you've got to be prepared for stocks to keep marching higher despite your better judgment, that they should keep correcting. So, things can easily turn back up from here. Weekly buy pivot, it can be away again. And, these weekly uptrends can last a hell of a long time. So they'll thrash around and, try to shake you off. But once it turns back up, be prepared for it to just continue. So that's the state we're in. Weekly uptrend still in place. Obviously, the monthly uptrend all still fine as well. It's just we've had a weekly sell pivot, so there's a bit of downside momentum for now. If it turns into more, so if we get another wave down, the weekly downtrend happens, that's when, I start to get more interested in saying, watch out to the downside. Uh, but until then, it's keeping an open mind, that this weekly uptrend could actually continue. So I'd need to see basically a weekly buy pivot from here, and that would sort of shut off that negativity that is around just now, and we're not there yet. So that's the situation. Seeing whether this market can hold in here for now, despite the fact rates are looking a bit sketchy and quite high, and inflation is a bit of a problem. And that's just how it is. It's a very tricky market, this one, right now. So for now, if you're long, you're staying long, maybe take a bit of profits if you've done well over the last 6 months, and be ready for it to turn back up and continue on. If it does, keep trading it to the upside, and if it does catapult lower, yeah, that's when we can take more evasive action. All right, cheers. I'll come back with more next week.